Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm with KKM Financial. Well, we're seeing a big reaction to the jobs number this morning, a much stronger number than anticipated, and with that, the SPX is up just under 3%. And the VIX cash is at the low end of the range for the last several months. VIX cash currently right around 24.30. We did see a low of 23.54 this morning, so we're off the lower bound, but that 23.54 print is the lowest level for the VIX post-March this year. Looking at realized volatility, I think that's one of the main factors here why we continue to see the VIX trending lower. 10-day realized volatility down around 12%. 30-day realized volatility around 21%, so that's down substantially even from last week. So we continue to see that trend lower, and I think that's putting pressure on the VIX as well. Looking at the roll market, $2.10, about a dime wider than it was yesterday, but a pretty steep curve between the first and second month future. And then when you look at the futures curve, as you move across the summer into the end of the year, it looks a little bit like Mount Kilimanjaro out there with the October peak. Again, there's some election premium or something that appears to be being priced in October, and I would believe that it's around the election. So you're seeing a pretty flat curve in July and August, then it picks up some steepness, and then it falls off into December. So again, keep that in focus when you look at the VIX futures. Looking at VVIX, measure implied volatility in the VIX options, 106, low end of the range, but we're seeing it hold here, and I think primarily because we're seeing demand for downside puts. I think Jamal pointed this out yesterday. Again, we're seeing demand for downside puts in June and August and all the way out to October as well. So we continue to see the put side being a little bit more active here as the VIX is falling off. Next week, I want to point out, Fed meeting, very important now, especially after this number today, to see how they're going to continue their narrative in the press conference. So we got that on Wednesday. We also have CPI and PPI, so a couple other data points out there next week, but the big driver I think will be the Fed. Couple that with the reopening narrative of the global economy as well. I think those are going to be your driving factors for Vol.